Welcome to another technical analysis. What we will be doing today is performing a full breakdown on a pair, both from a technical and obviously fundamental perspective, by checking the order flow, which is what the biggest banks and institutions are doing in the market, which is called the COT data. And by using the combination of these two different analyses, we will be able to understand exactly what kind of opportunity we can be looking for on the specific pair that we will actually analyze in this breakdown. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform, and every day I share a lot of free education and analysis on all my platforms. So if you don't want to miss out on all this free education and analysis, I really suggest you do subscribe to the channel, and I will see you in the video. Into this video, I want to perform a full breakdown of Audcad. Now, why do I want to speak specifically about Audcad? Because it is a very interesting pair for a potential trading opportunity, and it's also very educational if we want to analyze the pair, because I will be able to teach you a lot of interesting lessons during this analysis. So as usual, I suggest that you stick to the end of the video, because by the end, you will know exactly what kind of opportunity we can be looking for on this pair. Now let's start from the monthly, the weekly, and the daily timeframes, which are the best timeframes when it comes to the direction of the market. We will also see what we have from a COT perspective, so commitment of traders, which is what the biggest banks and institutions are currently doing in the market, so how they are positioned in the market. And by being able to actually read what the biggest banks and institutions are doing, we're able to gain an advantage over our competition in the market. Why? Because obviously following the market makers is obviously better than following retail traders, since retail traders are wrong most of the times. And then when it comes to entry, what is the best time frame for entry? The best time frame for confirmation and entry is the 4 hours. So monthly, weekly, and daily with the COT data for the direction and the 4 hours for entry. Let's perform this full breakdown. Now, starting from the monthly time frame, what do we have? Now, on the monthly, we have a market that has just created this W formation. Now, after a W formation on the monthly, what do you expect? You expect the market to give you a wave to the downside, because after the market creates an impulse, a correction, a lower low, and a higher high, the creation of this higher high makes the market overextended to the upside and in need of a retracement. To which level? A retracement to the previous resistance, which is now turned support, which is the completion zone of the pattern, so the neckline of the formation. Now, in our case, when it comes to our real market situation, where is the neckline? The neckline in this case is here. So this previous resistance, which is now turned support at this area. That is exactly the target zone that we expect the market to reach from a monthly perspective. Now, going down on the weekly, what do we see? If we go down on the weekly, we can see that currently the structure of the market, also from a weekly perspective, is bearish. Why it is bearish? Because we have this previous resistance area that the market had tested multiple times here, which the market broke to the upside with this candle and then broke back below. Now, when you see a market that has a horizontal structure level, the market tests this level multiple times, then breaks above, breaks back below. What do you expect? You expect the market to go for one last test of the structure and then for the market to make a move to the downside. So in this case, after the market created this fake breakout to the upside, break back below, you expect a test and a rejection to the downside. So on the weekly as well, all structure is bearish and we can expect a move to the downside. Going down on the daily time frame, what kind of situation can we see? Now, on the daily time frame, when did we speak about Audcad? We spoke about Audcad when the market was here, explaining all the reasons for which from here we wanted to see the market give us a move to the downside, and that is exactly what the market did. Then we spoke about Audcad again when the market was here, explaining that we wanted to see a retracement to go and test this previous support, which is now turned resistance here, and that is exactly what the market did. Then again, when the market was here, I made a video explaining all the reasons for which we wanted to see from here the market create a lower low, and that is exactly what the market did. And then again, we spoke about Audcad after the market had created this W formation here, explaining all the reasons for which from here we wanted to see the market give us this move to the downside. And again, that is exactly what the market did. And I will link all this previous analysis in the description so you can go and check them out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. And now what has the market provided to us? Now it's very important to say that in this move to the downside, there is one candle which is not related to the move, which is this green candle here. Now a candle that is not related to the move is a strong supply area. So we have quite strong supply inside of this zone, which is a level of previous support, which is now turn resistance, from which we can expect the move to the downside to actually start. So all structure on the monthly, the weekly, and the daily time frame is bearish. Let's see if what we see from a technical perspective is also backed up by what we see from a COT perspective. But first, I want to check one last thing. On the daily, if you have an impulse and you want informations on the retracement, where are you supposed to be placing your Fibonacci? You're supposed to be placing your Fibonacci from the high to the low of the impulse. And if you do this, what we can see is that the 0.786 was lining up perfectly with this very strong supply area. So we had a confluence of resistance in this zone, which was given by the 0.786 lining up with the previous support, now turn resistance, and that is the reason for which we're getting this rejection to the downside. Let's go and see what we have from a COT perspective, both if we check the AUD and the CAD. Now, from an AUD perspective, what we can see now on the AUD, we can see that with the last report, institutions added 786 shorts and closed 1.093K long positions. So longs are getting closed on the AUD from an institutional perspective, and shorts are getting opened. Net positions are decreasing from minus 165 to minus 2K, with 57K longs and 59K shorts. So overall, AUD is getting quite weak. And if we go and see what we have from a CAD perspective, what we can see now on the CAD, we can see that we went from minus 33K net positions to minus 17K net positions, with a clear increase of the net positions, with another 3K longs getting added with the last report and 6.6K shorts getting closed. So on the AUD, we're seeing weakness because institutions are shorting it. And on the CAD, we see strength because longs are getting added and shorts are getting closed, and net positions are clearly increasing, with also the long exposure increasing and the short exposure decreasing. So clearly we can expect a strong CAD. Now, weak AUD and strong CAD is exactly what we need, because we need a weak AUD and a strong CAD to make this move to the downside. So up to now, everything is lining up. So how we will be looking for an opportunity on AUD CAD with students. Now, as I said at the beginning of the video, the monthly, the weekly, and the daily timeframes are the best timeframes when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So how we will be executing our trade. Now, if we go down the 4 hours, what we can see? On the 4 hours, we can see that at the moment, everything is still bullish. There is absolutely no confirmation for the short yet. The market has just created this information on the 4 hours. And from here, we can easily make a move to the upside to create a stop hunt of all the stop losses that are above this high and above this high. So on the 4 hours, until everything will remain as it is right now, we cannot be looking for any shorts, and we will not be looking for any shorts because it will be simply too risky. So at the moment, we are still not looking for any shorts with students because on the 4 hours, we don't have any confirmations. So what we will be doing with students, instead of this area, we will be monitoring price action from a 4-hour perspective, waiting for the market to shift from a bullish market as it is right now to a bearish market. And only if the market will shift from a bullish to a bearish market and provide to us one of our valid entries, then we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and for the market to actually go and reach this demand area here, which will be our first target to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.